Are the good times about to end? Are we about to have a huge stock market crash in 2018? That is what we are discussing here today, guys. 2017 has been an amazing year to be in the markets. If you remember, in 2016, I said we would not have a stock market crash or a recession in 2017. Looks like I will be 100% correct on that observation. So now we got to figure out, do I feel like we're going to have a stock market crash in 2018? I'm going to share with you guys all the things I look at as far as judging, are we going to have a stock market crash next year? And some comments were made by the head of JP Morgan that are extremely scary, guys. The comments, these like went under the rug about 2 weeks ago. He made some comments that were like startling, but yet it didn't garner up much attention. And I'm amazed by that because these comments are really scary, guys. So I hope you enjoy this video today. I'm Jeremy. This is a financial education channel. If you're newer to the stock market, make sure you click that second link in the description. That goes into my 11-part stock market investing mastery course, guys. That should help you out, you beginners out immensely. So let's look at this here, guys. Let's start out with the comments that were made out of JP Morgan here, the biggest bank in the United States of America. A little over 2 weeks ago, the head of JP Morgan Chase's investment bank issued a rare warning about the state of the stock market, telling research analysts that the bank is anticipating, quote, a painful market correction in the near future. Okay, this was made by the head of JP Morgan's investment banking. Okay, that's scary. That's scary when you're talking about the biggest bank in literally the world making a statement like that, like we're going to have a painful correction sometime soon, basically meaning 2018. That is really scary, guys, because a painful correction, there's a few different things, okay? When you have a stock market correction, that's usually like a 5 to 10% downward move, okay? When you say something like a painful stock market correction, that's more implying like a 15 to 20% downward move. And then really, once you get into 20% plus downward move, you know, in the course of a year, you're really talking about stock market crash at that time, guys. So that's really, really scary. But I'm not quite as scared as he is, although I think that's worth paying attention to, okay? Because we're talking about this is the biggest bank issuing a statement like that. That's scary, guys. So when I look at the markets here, there's a lot of different things I like to look at as far as, are we going to have a stock market crash? Are we going to go into a recession? Those type of things, okay? The first one is I like to look at the forward PE of what stocks are trading at, okay? So we're going to put F and we're going to put PE here. And right now, the forward PE on the S&P 500 is somewhere around 23-ish, okay? So this is a very high forward PE based upon historical standards, okay? Usually, you know, the forward P's are somewhere around 20. However, that doesn't mean we're going to have a stock market crash or anything, because there's a few things that are going really good for the stocks in the S&P, okay? One is corporate taxes look like they're going to be cut to 20%, when before they were about 35%, okay? So corporate taxes are about to go down drastically. Why is this important? Well, one, that's going to boost everybody's net income up quite a bit in the S&P 500, right? As long as they can keep their business consistent, their net income is going to go up massively because their taxes are being cut massively, right? So one, they can put some of this money into, you know, creating more jobs and trying to expand their business. Some of that will get spent out there. Some of it's also going to get spent with dividends. They'll up dividends, you know, the companies that pay it. But a lot of this money is going to be used for share buybacks, okay? SB, share buybacks. Why is this important? Well, when you have companies buying back shares in mass, you know, millions and millions of dollars, tens of millions of dollars, one, that helps out the stock price because you have a huge buyer in there. It's the company buying their own stock. Two, it basically is going to end up raising their EPS over time, because as long as they can keep their net income consistent, then obviously their EPS is going to rise drastically because they're buying back shares and retiring shares off the market, so there's less shares to be counted against on the net income side here, guys. So for that reason, that's a huge boost to the market that I think no one sees. Also, just in general, the majority of companies out there, earnings are going up right now. If you look at across the S&P 500, the majority of companies' earnings are rising, and some of them are rising at a very high rate. If we look at what Apple's going to do next year, their earnings are going to, that's the biggest company in the world, right? Their earnings are going to go up substantially. We look at what Google did this past year, their earnings are way up. We look at, you know, Nvidia, we look at, you know, these huge companies, you know, Amazon, their earnings are going up. Company after company across the board, their earnings are going up. So you have their taxes being cut and you have earnings going up. Then you have, a lot of this money will be funneled back into share buybacks. That's going to help out the whole entire market immensely, in my opinion, okay? So that's the first, set of things I like to look at. I like to look at the forward PE and kind of judging where that's going there, okay? So then I kind of like to look at some economic news, okay? So I like to look at the unemployment rate, okay? Unemployment rate. Some people don't like this rate. They say it's fake. They say the government makes it up. They say it's not a realistic thing or whatnot. I don't really care. I just look at the unemployment rate and I say, okay, this is the same way it's been judged for such a long time here, guys. And there's something called the real unemployment rate, which is a total different category there. I like to look at just the regular unemployment rate that the government puts out there, right? Right now we're below a 5% number, okay? We're below 5%. That is a very low unemployment rate. And for that reason, when you have a low unemployment rate, wages tend to go up. And we have started to see some wage growth. It's very little right now still, but there is some wage growth. So wages are on the upward move. So that's good news, okay? Not great news because it's not like they're rising at a substantial rate, but when you got a low unemployment rate, you got wages rising. That's good for the economy in general, okay? Then you look at, job creation. Job creation is also going up right now. We look at how many jobs are created versus lost every month. It's always like 100 to 200,000 plus that are created versus lost. And that's been like that for years and years and years now. Basically since we came out of the recession. So when I look at kind of what the economic news is, I look at everything and I say, this is pretty good right now. We got low unemployment rate by historical standards. We got wages going up, not a ton, but they're going up if you look at the stats. And then we got job creation is pretty good in this country right now. So that's good. And of course, for my worldwide viewers, like everybody's important. I'm just kind of, a United States citizen. And when you look at the United States, when something happens with the United States, it affects the entire world. The entire world goes down when the United States goes down because the economy is so powerful here, right? So that's kind of why I'm judging it off here. So, but then I like to look at the next biggest market, which is what? China. China is the next biggest market after that. What is going on in China? Economic growth is very strong in China right now. GDP is solid right now in China. And once again, people say the GDP numbers out of China are made up. GDP pretty much has grown 5% plus pretty much every single year in China. That's phenomenal. And like I said, some people say it's made up or whatever. I don't know. I just look at China and I look at the way businesses are growing in China, the facts, the numbers you can't lie. And I say, why? There's no reason for me not to believe the GDP in China is growing by 5+%, because based upon what companies are doing, based upon a company like I own Wynn Resorts, like based upon their numbers they're posting are absolutely amazing, right? If you look at Apple, you look at Starbucks, you look at all these companies that are growing in China, there's no reason to think China is not in a very strong growth mode. So when I look at the most developed country and I look at the second most, I'm feeling pretty confident as far as the way the economy is going right now. The next thing I like to look at is I like to look at something I call asset bubbles, okay? So asset bubbles, we'll put AB here, asset bubbles. So we already talked about the stock market. I don't feel like we're in a bubble in the stock market because even though the forward P is a little higher than historical standards, like I mentioned with taxes coming down, those kinds of things, share buybacks and whatnot, and then companies' earnings just going up in general, I think for that reason we're not really in a bubble in the stock market. So then I look at real estate, okay? Real estate does not scare me at all right now. Real estate does not scare me. I just see solid growth. There are some markets that I'm like, it's a little hot for for what I feel. I mean, I'm talking about Bel Air, I'm talking about Beverly Hills, I'm talking about Manhattan. There are some markets here in the United States that are a little hot. But those ones, are so small when you look at the whole realm of the United States that even if those ones were to go down, it doesn't really affect too much. When you're talking about real estate, you're really looking at the entire country, okay? And where, if you look at, where we were at in 2006, 2007, when we went into the housing crisis, prices were astronomically high in the state like I live in, Nevada. I'm talking out in Arizona where I lived at that particular time. I'm talking in Florida, Texas, huge states that had, way overpriced, valuations on what homes were worth. So real estate, I do not feel like there's a bubble in real estate right now. And then we kind of look at, gold, and silver and those kind of things. Gold and silver, I don't feel like there's a bubble there. Those are just consistent, commodities there. We look at, something like alternative investments, okay? And this is where I get a little scared. So alternative investments. What do I talk about when I talk about alternative investments? I'm talking about things like cryptocurrencies, okay? This is where I'm a little scared. Because we got something called Bitcoin here, which has attracted a massive amount of attention, right? Bitcoin is up well over 1,000% this year. Over 1,000% this year. And that's after it's been up massively for the last 5-10 years, okay? But this year in particular, it's up over 1,000%. That is unbelievably scary to me because that means massive amounts of people have flooded into Bitcoin this year. We're talking about, when you got to understand Bitcoin, you understand that's a currency, okay? And you can't use the argument that, there's a finite amount of them because it's a currency, and guess what? There's a finite amount of a lot of things, right? There's a finite amount of oil in the ground, right? Oil and natural gas. If oil and natural gas just evaporated tomorrow and we had no oil or natural gas out there, the world would go into chaos immediately. Like the whole world as we know it would be over. No one would care about anything. Their money wouldn't be moving around. Nothing. If oil and natural gas went away, and we don't go to the gas station and pay, $1,000 for a gallon of oil, right? No, or for gasoline, we pay $2 or $3 or whatever, guys. So Bitcoin's really scaring me right now because it's attracted so many investors into it, and the price is going up at such a rapid rate that is completely unhealthy. There's no justification you can say that type of move in Bitcoin. It's not like it's a company where their earnings went up massively. We're talking about this is a currency. This is a currency. Currencies are not supposed to go up hundreds of percent, never mind 1,000% in a year. That is absolutely abnormal. So for that reason, cryptocurrencies really scare me because what you have is when something falters, right? Let's say Bitcoin and cryptocurrencies falter. What you have is then you have panic set in some other asset classes, right? It almost always happens where one asset class goes down and it takes down another asset class and another asset class. For instance, real estate was extremely overvalued in 2007, right? Also in 2008, the whole housing market collapses. And what does it end up taking down? It takes down the stock market. The stock market, by 2009, the stock market the Dow was at what, 6,300 or something like that, or 6,700. Now the Dow is at 23,000 or 24,000. Because real estate crashed and then took down the whole economy and ended up crashing the stock market. So when one asset class goes down that has a lot of investors in it, which cryptos do right now, and Bitcoin and BitConnect and all these things, right? If that was to go down, that would affect everything else because everybody would start to panic and be like, oh my gosh, everything's going bad. Also, when you have these people losing money, then they probably have investments also in the stock market or real estate, and then all of a sudden they get killed on this and they have to sell something off. They sell something off and it creates more selling, and it's just the ball going in the wrong way, right? When the ball's going in the right way, everything's great, and more buyers create more buyers. But when things start going in reverse and more sellers start creating more sellers, guys, it's a bad situation. So when I look at the economy, the one thing I'm scared of is Bitcoin. Now, people always, kind of bring up, student loans, the federal debt. That stuff has been around since the beginning of time. This is nothing new. Student loans is nothing new to the economy. Federal debt is nothing new to the economy. These things have been going on for a long time. They're the type of things that they just truck along. As far as those taking us down, I don't believe so. If anything, those could hurt us in the future if other things fell and then people started defaulting on student loans and those kinds of things. That could hurt us immensely, and we had to start, even adding up more and more federal debt and those kinds of things. That could hurt us, but that has to be affected by the economy going south and asset classes going south, because then people don't have money to pay for stuff at that point in time. It's not like, if you got a great job, you don't just stop paying your student loans. You stop paying your student loans because you lost your job, or you stop paying your car loan because you lost your job and then you're out of work and things like that, guys. So when I look at this, going into last year, I felt like there was probably a 90% chance of us not having a recession, not having a stock market crash. If we're going into this year, I'm not that confident. I would say I'm probably about 70% this year. There's probably a 70% chance, I would say, we're not going to have a stock market crash. We're not going to have a major recession. in 2018. So that's kind of how I feel with that, but you know, the time will tell if that is. But I'm definitely not as confident going into this year as last year. Last year I was super confident because of where the markets were trading at, and a lot of things we had going on with the economy and whatnot. And I also didn't feel like we had as many asset bubbles as we do now. You know, cryptos is a huge one in my opinion, that we just got some insane valuations out there. And we'll see what happens as time goes on, guys. But I hope, you know, obviously I'm in the markets, I'm invested heavily. You know, I definitely have a lot of money on the sideline. So if something does happen, I'm well prepared. And that's what you guys should always be at some, you know, at a time. You should always have a significant portion of your money on the sideline just in case something happens, you know, that way you're ready to jump in there, guys. But I'm in the market still huge. So, you know, I hope nothing happens in 2018. I hope it's a great year. I would say that's probably going to be a very good year. Are we going to have the NASDAQ go up 20+% next year and Bitcoin go up another 1,000% next year? I highly doubt things like that are going to happen, but we shall see, guys. So anyways, I hope you enjoyed this. Leave a comment if you got something to say, if you got an opinion on this. I would love to hear from you guys. Hit a thumbs up if you got some value out of this video. I hope you guys did. Make sure if you're new to the stock market, you click that second link in the description. If you're an experienced investor, click that first link. Join that private membership group, guys. That's an exclusive group where I talk about stocks I'm selling, buying at the exact time I'm doing it, guys. Thank you for watching and have a great day.